Welcome to the tutorial on auditing. In this tutorial, we are going to learn about the response to fraud risk factors. What are the examples of possible audit procedures to address the assessed risk of material misstatement due to fraud? That means whenever there is a material misstatement due to fraud, in that case, as an auditor, what type of procedures you need to adopt for addressing or responding to the assessed risk. The following are the examples of possible audit procedures to address the assessed risk of material misstatement due to fraud resulting from both fraudulent financial reporting and misappropriation of assets. Already in the previous tutorial, we have learned that fraud arises from two ways. The first one is whenever there is a fraudulent financial reporting, or the second way is whenever there is misappropriation of assets. And the following procedures can be applied for addressing the misstatement. The first one is visiting locations or performing certain tests on a surprise or unannounced basis. As an auditor, you should not announce your presence to the organization. You can do surprise visit to the specific location where you need to investigate or examine any facts or any assets or any item. For example, observing inventory at locations where auditor attendance has not been previously announced. That means, as an auditor, you should not disclose the possible presence or attendance. Just you can do a surprise visit and investigate the facts or investigate the assets or any items. As well as you can also count the cash at a particular date on a surprise basis. You should not inform the authority that you are going to count the cash. You can do counting at a surprise basis. You should choose the date for counting the cash at a random basis. And the next procedure by which you can address the assessed risk of material misstatement is requesting that inventories be counted at the end of reporting period or on a date closer to period end to minimize the risk of manipulation of balances in the period between the date of completion of the count and the end of reporting period. That means whenever you need to count the inventories, you should choose the closing date of the particular period so that you can find out whether there is any manipulation of balances with the actual inventories. After that, we can see the next possible audit procedure to address the assessed risk of material misstatement is altering the audit approach in the current year. Maybe you have audited the company in the last year and you have applied a procedure, and this year you can change the approach or procedure. For example, you can contract the major customers or suppliers orally in addition to sending written confirmation. That means maybe in the previous year you have sent written message to the supplier or customer for getting any information, and in this year you can directly go to the customers or suppliers to take oral information. Another example is you can send confirmation request to a specific party within an organization or seeking more or different information. Maybe in the last year you have sought some information. In this year you can ask for another information, not the same information from the same party, or you can ask for additional information from the respective party. The next possible audit procedure to address the assessed risk of material misstatement is performing a detailed review of the entity's quarter-end or year-end adjusting entries and investigating any that appear unusual as to nature or amount. That means you should do some detailed review of the entity's quarter-end or year-end adjusting entries. The purpose is to investigate whether there is any unusual amount of balance in any accounts. And the next possible audit procedure to address the assessed risk of material misstatement is for significant and unusual transactions, particularly those occurring at or near year-end, investigating the possibility of related parties and the sources of financial resources supporting the transactions. That means, as an auditor, if you think that there may be any unusual transaction, in that case, you can investigate what are the sources of resources for that unusual transaction and who are the related parties connected to that unusual transactions. And the next one is performing substantive analytical procedures using disaggregated data. As for example, you can compare the sales and cost of sales by location, line of business, or month to expectations developed by the author. You should compare the sales with the cost of sales for any specific location or for any business line or for any month. If you can compare between the sales and cost, then you will get whether there is any inconsistencies in the amounts, and that type of procedure can be considered as a substantive analytical procedure for addressing the assessed risk of material misstatement. And the next possible audit procedures to address the assessed risk of material misstatement is conducting interviews of personnel involved in areas where a risk of material misstatement due to fraud has been identified. In that case, you need to obtain their insights about the risk and whether or how controls address the risk. That means, as an auditor, you should take interview to the respective persons who are responsible for monitoring the control, and whenever you are interviewing those persons, you need to take their insights about the procedures taken by them for reducing the risk or addressing the risk. And the next possible audit procedures to address the assessed risk of material misstatement is when other independent auditors are auditing the financial statements of one or more subsidiaries or divisions or any branches. In that case, as an auditor, you need to discuss with them the extent of work necessary to be performed to address the assessed risk of material misstatement due to fraud, resulting from transactions and activities among these components. That means, in a group of company, there may be subsidiaries, and as an auditor, if you work with other auditors, in that case, you need to discuss with them what is the scope of your work or what are the extent of your work. And whenever you get idea about your scope or extent of work, you need to perform your auditing process so that you can identify the assessed risk of material misstatement due to fraud. And the next possible audit procedure to address the assessed risk of material misstatement is if the work of an expert becomes particularly significant with respect to a financial statement item for which the assessed risk of misstatement due to fraud is high, performing additional procedures relating to some or all of the expert's assumptions, methods of findings to determine that the findings are not unreasonable, or engaging another expert for that purpose. That means, as an auditor, if you need help from expert for any significant item, in that case, you should apply additional procedures to rely on the assumptions of the expert, because you need to determine whether the findings of the expert are reasonable or unreasonable. And if you think that the expert with whom you are working is not enough, then you can engage another expert for the same purpose, because the significant issues should be dealt cautiously to find out whether there is any high fraud. The next possible audit procedures to address the assessed risk of material misstatement is performing audit procedures to analyze the selected opening balance sheet accounts of previously audited financial statements to assess how certain issues involving accounting estimates and judgments, for example, an allowance for sales returns, were resolved with the benefit of hindsight. That means, if the previous auditors identified any inconsistencies, in that case, you need to analyze the opening balance for any accounts to measure whether the issues were resolved with the benefit of hindsight. I mean, whether the issues were resolved with the particular stakeholders. And the next possible audit procedures to address the assessed risk of material misstatement is performing procedures on account or other reconciliations prepared by the entity, including considering reconciliation performed at interim periods. I mean, you need to prepare some reconciliation statements for the accounts, and you can do such type of reconciliations at interim period. I mean, in the middle of any particular period. And the next possible audit procedure to address the assessed risk of material misstatement is performing computer-assisted techniques, such as you can apply data mining to test for anomalies or inconsistencies in a population. You can take help from computer-assisted techniques. As for example, you can use the data mining for testing any inconsistencies or anomalies. And the next one is testing the integrity of computer-produced records and transactions. I mean, whenever there is a information system in an organization, in that case, you need to test whether those information systems are maintained with integrity. Because if the computer-produced records and transactions are not maintained with integrity, then there is a possibility of fraud risk. And the last one, for possible audit procedures to address the assessed risk of material misstatement is seeking additional audit evidence from sources outside of the entity being audited. I mean, you are performing your auditing service in an organization, and for some information, you can take help from outside parties for collecting audit evidence. So, these are the possible audit procedures to address the assessed risk of material misstatement due to fraud. Thank you.